Good morning, everyone. Obviously, Kyle Winterbottom here, the director for Lawrence Harvey, and I'm joined by Josh Ricks, who's a director at Woodhurst. I guess me and Josh have been having a bit of back and forth during these pretty crazy times about the impacts that things are having, and thought it'd be useful to put our heads together and release something out there really around some of the questions that a lot of our clients are kind of facing and debating at the moment. So, Josh, why don't you just give a brief introduction into Woodhurst?
Yeah, absolutely. So I'm Josh Ricks, director, co-founder of Woodhurst Consulting. We're a digital transformation consultancy. So we help clients primarily in financial services enhance, improve, or build new digital capabilities. And we also have a bit of a market within the energy sector as well, where we've been supporting clients in the same vein. And it's quite interesting the more we engage with that market to see some of the synergies between FS and energy and how digital transformation is sort of being embraced at the sort of same rate throughout both markets.
Yeah, absolutely. Okay. So obviously our angle is all around the data analytics and AI side of things. Mm-hmm. And, Ben, your partner from Woodhurst, has been on our podcast and all that type of thing. So I think the FS angle for us is hugely relevant because we do a lot of work in the FS space. And obviously as far as data goes, FS probably up there with, the biggest sector in terms of wealth of data. So I think, look, let's get into this. I guess I'm keen to kind of get your opinions on how this whole, COVID-19 situation has impacted the financial services sector. I think it's been pretty evident that regardless of sector that you're in, most businesses have had to come up with some kind of knee-jerk reaction to dramatically change their business model to be able to adapt. So I guess, how has the financial services industry adapted kind of in the short term?
Yeah, I mean, I think the short-term impact is the need to rapidly support customers that are being impacted with some form of financial distress. That's sort of the biggest concern for the banks at the moment, and it's actually promoted quite a positive focus on the customer experience that has been developing over the last sort of 5-10 years, but is really that sort of keen, important laser focus on the customer now. So like you say, you can call them knee-jerk reactions, but it's what we've seen is a lot of the banks building out customer support functionality in a digital way in order to remove the strain on their customer support teams and their operational teams. That's probably the biggest short-term impact that you'd seen. If you think about the reality of things, you'll have a lot of customers that are looking at a loss of income or challenges paying rent, challenges paying their mortgage, and they want to get in touch with their bank to ensure that they'll be financially stable for the short term. And the banks are dealing with customer support teams that are now working from home using technologies that maybe weren't in place before. I mean, customer support teams working remotely is quite an alien concept for a lot of the banks, whether that's onshore or offshore as well. You think about the offshore call centers where you're working in regions that have been massively impacted by the virus, as far as sort of just managing bandwidth across a country like India has been really, really challenging. So what we've seen is the banks building out sort of customer support functionality, chatbots primarily on maybe their web application or their mobile application, in order to just deal with simple customer queries and route them to the right place in a digital way. So I think you've seen Nationwide, NatWest, HSBC, a lot of the larger banks putting in place this functionality so that they can reduce the operational strain on their customer support teams, which is really, really positive. And probably you look at the rate of change, the pace of change in these last couple of weeks, you've got banks that have been trying to implement these solutions over the last 12, 18 months, maybe longer, and they've been able to do it in days. And that is really, really fantastic. What they probably need to start doing now is having a bit of a retrospective review of why they've been able to do it so quickly in this period versus the last sort of 12 to 18 months and what the challenges were there. But yeah, I think in terms of, call it a knee-jerk reaction, although I think it's possibly a little bit more than that. it's all about reducing the operational strain on the business in the short term. That's got to be the key concern, and supporting customers in the best way possible.
Yeah, absolutely. I've got to admit, I was quite surprised at how proactive the banks have been in terms of offering support, and I think it was a matter of days really when the crisis happened that I was getting emails through about do you want a mortgage holiday, do you want a credit card holiday, and this type of thing. So it's been good to see that they have been able to move at such pace, and as you say, probably things they've been trying to do for a very long time. So it's really interesting. Okay, so obviously businesses have been forced to adapt and digitize their offering and their business model in the short term to kind of overcome and stabilize the business throughout this crisis. And obviously outside of FS there's a whole host of things you can kind of lean on. Restaurants, there's a pub near me that does takeaway beer, believe it or not. I've not tried it yet, but I probably should do. You can just go and pick it up in a 4-pint barrel thing, which is pretty cool. But I guess in terms of the longer term impacts, then what does this mean for the financial services industry beyond COVID? What's going to be the new norm, and I guess how are organisations going to have to attack this whole digitisation piece?
Yeah, I guess in terms of long term, you've got to look at the economic climate that we're entering into now. It's going to be a recession environment, maybe a global depression environment for a number of periods you'd expect. And I think there was, I saw an article yesterday talking about how the impact of this is going to be similar to the Great Depression in the 30s. And you think about that level of financial strain that's going to be put not just on individuals, customers, but actually on the banks and their ability to generate revenue and continue to operate in a sustainable way. They're going to have to look to dramatically reduce cost where they can, which has been an ongoing exercise for the banks over the past sort of 10 years or more since the crisis, and try and identify new areas for revenue growth. And I think digital transformation can really support both of those initiatives. If you look at the operational cost reduction, we've spoken about it already with diverting customer support into digital channels, but that's sort of a plaster over a wider, massive cost base that all of these banks are dealing with. And even if you look at the digital banks, I mean, a lot of their cost base, the cost to serve for a customer is still reasonably high, because of the way that you want to maintain that relationship-driven approach where you can.
Yep.
Look at the larger banks. The main sources of that operational cost, obviously, you've got huge branch networks, which are inevitably going to get a reduced amount of traffic now. You've got these huge support centers that are directly supporting the customers, but you also have sort of these back office support functions also operate as support centers, doing a lot of, it might be manual processes, it might be supporting fraud monitoring and being experts within the KYC journey and being able to identify whether a transaction that's been flagged as fraudulent is actually fraudulent, or whether it's a false positive and it can sort of go into the queue and be marked as okay to process through, or they're supporting the mortgage journey and entering customer details from one system into another because you haven't got that end-to-end flow. So if you look at that sort of end-to-end operational cost base, the banks are going to have to look at not just how they can digitize that front-end piece, the app functionality or the web-based functionality, that sort of plaster over the top and that initial customer experience, which they've been beginning to do quite well, but how can you digitize and automate the end-to-end of these processes for your retail banking customers, your business banking customers, your corporate customers, and maybe the other functions within the bank as well, if they've got investment banking and market sectors as well. And that's a much wider, more holistic process that's going to continue to take a number of years, but this period should really be able to be a trigger for that to digitize end to end. And move the operational focus away from sort of individuals and FTE manually supporting workflows to potentially those same individuals supporting the digital solutions that are automating those workflows. So it's a change of focus from maybe doing a repetitive, potentially boring manual task to supporting a technology that is able to automate that at such a rapid rate. You look at, I think one of the examples I was just reading about actually is how Banco Santander in Argentina has automated the credit process so that they can give loans to small businesses within 3 minutes. So they've pre checked all customers for their credit requirements, how much credit they can give these customers, and then they've created a web-based platform where the customer can send in a request for that credit, and then within 3 minutes that money will be within the customer's account. That's an end-to-end journey, an end-to-end flow that operates so rapidly and brings a lot of support to the customers, but it's going to dramatically reduce the cost for the bank. So that is a huge area where I think over time banks have got to look at the end-to-end flow and how you can move away from manual processes within the workflow and start to digitize and automate those where possible, using things like machine learning, AI, but also simple automation tools, RPA and that kind of thing.
Yeah, absolutely. And I think you make a really good point there, because I guess rightly or wrongly, when you think about, especially within the banking world, when you think about digital and digitization, you automatically think, oh yeah, I can go on my mobile and I can check my account. And as you said, that's the very front end of making it look pretty and having the customer have a nice experience and that type of thing. Don't really give much thought into actually a bank's able to kind of create full end-to-end workflows, so that you don't ever have to speak to somebody. Because I guess historically, as you'll very well know, being in the industry, if you want a mortgage or you want a loan, typically you have to go into the bank or speak to somebody on the phone, because it typically works out easier, because often the process of doing it online is a bit tiresome normally. So it's really interesting, and obviously great to see that there's some financial services businesses already starting to adapt to to allow that to happen. So I mean, that's good. What about those then that are maybe at the back of the queue in terms of digital footprint, that maybe don't offer the best customer experience from a digital standpoint?
Yeah, I think the approach is still similar. You want to try and digitize the end-to-end where possible, but it's probably what you'd consider to be a fairly standard way of looking at this, of identifying those processes or workflows or customer journeys that are either most important to the customer or most costly for you as a business to serve, and automating those step by step or digitizing those step by step. So maybe it's the account opening journey, and actually we released, not to plug it massively, but we released this survey earlier this week to try and understand the focus of banks' digital transformation journeys on the back of COVID, and the things that came out as the core processes that people thought needed that digital transformation were KYC, account opening, and customer support. So if you look at the account opening journey, a lot of companies do have the digital option, and you look at the likes of Monzo and Starling, and they're doing this expertly. But let's take a company that doesn't, one of the financial institutions that doesn't have that digital account opening journey. That's going to be a huge area for them to want to digitize early, and you want to look at how you can introduce that into your mobile workflows, your web workflows, how you can ensure that you're capturing all of the customer information you need in a digital manner, how you can integrate some form of digital KYC, know your customer, maybe using sort of facial recognition technologies or OCR, optical character recognition technologies to look at documentation and that sort of thing, and how you can digitize that all the way through so that the customer's account could be opened within a matter of, well, minutes in some cases, or days if there are extensive checks required. So it's about looking at those individual customer journeys that are going to have the biggest impact for the customer, but also the operational costs for the bank, I think, and going through a simple process of understand the process end to end. How can we simplify it? Where do we have data gaps today? how can we digitize that process, and then how can we apply intelligent technologies to automate. And you've got to go through all of those steps to get there, because if you try and automate, digitize, and apply intelligent technologies onto a substandard, suboptimal process, you're not going to be improving things in the way that you want to, and it's likely that that digital process will fail and break.
Yeah, absolutely. It sounds to me like, obviously I've had a number of conversations over the period of recording the podcast that we do, and often that is a big part of that has been around data transformation and things like that. It sounds very much what you're describing, similar to a lot of those conversations I've had, is around identifying and prioritizing what you can impact quickly and simply, rather than trying to do this whole big, huge end-to-end transformation of, that encompasses everything at once. Is that fair?
Yeah, I think so, and that's a message that we hear very frequently when we talk to other people in the market, but definitely that we try to impart upon our clients. It's that find the high value pieces, but chip away at them bit by bit to make sure that you really are returning that value on an incremental, regular basis. If you try and do this on an end-to-end 2-year, 3-year program, it's going to be difficult to get that investment up front, particularly in this kind of environment. But also, you'll just go through so many cycles of sort of re-engineering and maybe looking back at requirements again, and you're not going to realize any of the value until 3 years down the line, and it's going to cost twice as much as you thought it would. With this type of exercise, digital transformation in particular, it can be fairly straightforward to really nail in and hone in on the processes that you want to digitize, and try and do it within a period of months, or even, as the banks have now demonstrated, within a period of days. It can be done.
Interesting. I guess where does data and AI sit within all of this then? How is that going to help and enable businesses to be able to go through that digital transformation?
Yeah, I guess looking at that sort of rough process framework of simplification, automation, digitize, and then apply those sort of intelligent technologies on top of it, that's where you're really looking at AI and machine learning tools towards the back end of that digitization journey to try and drive enhanced intelligent automation. So it's going to be hugely applicable across this journey. If you look at the plasters, if we continue to refer to them as that the banks have put out so far, these sort of small customer support functionalities, they're all using some form of machine learning, simple natural language processing, so that they can understand customer requests or customer questions and either provide a suitable response to them or route it in the right place. So that's an example of machine learning being used in action today. If you look at how that can be enhanced, the bank should also be making sure that the machine learning tool can pull out all of the key queries that maybe aren't being answered automatically by the system, and potentially triggering alerts that allow the bank to then look at how they can automate some of the answers to some of those questions as well. And it's really taking advantage of those tools a little bit further, just that initial customer impact and customer response. But the first step to any of this is making sure that data is being provided in a digital format, so that the machine learning tool can actually work with it. So you need to have that front-end digital input from the customer, whether it's web-based or mobile, whether that's a customer chat tool, whether that's account opening, whether it's another journey entirely. You want that digital interface so that the data is in a suitable format to be used, and then those machine learning tools can be applied on top of that to sort of automate the end-to-end.
Okay, yeah, that makes sense. Okay, I guess in terms of the impact that this is having and is going to have moving forward on society as a whole, obviously I've had a whole host of conversations around businesses saying, actually, we're looking at redesigning our office space, for example, or do we even need an office, maybe, and having a remote or a part remote workforce. And that kind of led me then to be thinking, well, okay, what's that going to do to things like car sales, obviously, city centre bars and restaurants, coffee shops, I guess it's not that easy for Starbucks or Costa to digitize and get their coffee where it needs to be. So I guess businesses that like banks, for example, may seemingly have it slightly easier to adapt in that sense from a more of a logistical perspective. But they were just the obvious things that jumped out to me as I was kind of piecing that together on, okay, it led from, we might not have an office. So then it was, okay, well, there's going to be less human foot traffic. Okay, what does that mean for the bars and the shops and so on and so forth. But in terms of the model, then the business model moving forward for banks to adapt and survive and other financial services organizations, how does that work for the financial services industry in comparison, in terms of the social impact?
I guess the way that you're describing it there, focusing initially on the physical side of things, the main physical sort of tangible aspect of the bank is the branch. And obviously footfall traffic towards the branches has been declining over the years, and all of the traditional banks have worked to reinvent the branch in a way that better serves customers. So you don't have these long queues in front of the tellers anymore. You have sort of these customer excellence agents that are able to support a wide range of queries and often to support people on their digital journey. So you often have these sort of tables with iPads or some sort of digital interface where you can open an account on the iPad in the branch, and it moves a customer from even just the mindset of the bank being a physical thing into the bank being digital, and you can set a customer up on that digital journey very early on. But the way that banks use and see branches now is going to be really, really interesting. I mean, I've driven past a couple recently, and the queues outside are massive still, which you'd expect because of social distancing and the like. But it's a stark reminder of how important the branch actually is to some people. There's some customers that need to do their banking within a branch, and that's partly down to customer mindset and culture and the way that people operate. Particularly, you're looking often at maybe a slightly older generation or vulnerable customers that need that branch, that physical branch network. But there's often also certain customer journeys that you just can't do on the app or online. So I had one with the business account. We use Metro Bank, who obviously they've championed the branch over the last few years and carved out a really positive market share on the back of that. I had to go in there to hand in a check that I received it was a VAT return or something like that. And you think, yeah, I understand why I need to go into the bank, why you need to see this physical piece of documentation, but why can't we just have some form of check imaging on my phone where I'm scanning an image of it in, and we're just doing all of that in a digital way, because it reduces the impact on me as a customer, reduces the footfall for the branch in an environment where social distancing is going to remain for a period of time, and it reduces the requirement for the staff in that branch to deal with such a simple request from me when they could be supporting a vulnerable customer that really needs some help. So I think there's going to be continuing changes around the way that customers use the branch that will happen naturally anyway, as just everyone in society gets more comfortable with digital tools and the security around digital banking. But I'm not sure exactly where it's going to go. You can look at sort of what Barclays have done over the last few years. Their branch network's reduced, but they've actually crafted some of those. I believe they've used old branches in some cases, or rather, even if they haven't, they've created sort of physical ecosystems, not just based around standard banking processes. They've created ecosystems for startups and supporting smaller companies and smaller businesses in their journey from being a small fledgling company into something a bit grander and a bit bigger. And that's a really positive change in creating an ecosystem of like-minded companies, but also giving Barclays a way of tapping into that startup market, that fintech market, and maybe taking advantage of some of the tools and technologies that are being created by these guys. So that's quite an inventive way of changing the physical nature of the bank and augmenting it in a way that is still giving a positive impact to customers, but it's supporting them in an inventive and different way than they have previously. So I think that's going to be really interesting to see, but I don't know exactly where the branch model is going to go over time.
Yeah, Do you expect the number of physical branches that these banks have around the country to fall? Do you think that's a likely outcome?
They've been falling. They've been falling for years, and
Yeah.
I think that's going to continue. If you look at the digital banks and their customer bases now, they're not focusing on a branch network in any form whatsoever. They're trying to make sure that customers can execute pretty much any banking process that they need to execute through an app. They're not even the web-based application either. And the more that people switch primarily to those banks, and it's starting to happen now. I think I read earlier today that Monzo's begun to top, or at least climbing up the account switching lists in the UK, and they've got something like 4 million customers now. You've got Revoluts, Tides, Starlings, Atoms, Tandems, all of these digital players that aren't relying on that banked branch network at all. It will reduce, but there is still a requirement, particularly for vulnerable customers, particularly for maybe elderly customers or people that just generally have concerns about digital technologies, to be able to serve them in a positive way with that physical customer relationship. So branches will reduce, but to what level and what extent, I'm not sure. And how the business model changes, I don't know. It would almost be quite nice to have sort of a branch as a service where there'd be some method of serving customers. So you take the digital model, the idea of being able to bank anywhere, anytime, do whatever you want to do on your app, on your web. Imagine being able to do that with sort of a customer service agent in some respects as well, which I guess is what the phone call centers have always been trying to do. But being able to do that physically, don't know how you make that operate, but quite an interesting concept that banks could begin to look at.
Yeah, interesting. Okay. I guess one thing that I've been thinking about, I had a conversation with a podcast that I recorded recently, was around this whole digital transformation piece that businesses are going to go on. And if you look at the banking sector, there's not a great deal stopping them from going completely digital if they wanted to. A lot of it is more of they don't, and that's their model, and they still want to have that branch, and obviously the whole complexity, because typically the banks that have branches are typically the bigger ones, and so on and so forth. But I guess as they start to move more towards that end of the spectrum, does that then mean that the digital banks like your Monzos, your Starlings, all them, the names that you just mentioned, does that make their business model less attractive to people if you have a bigger name bank that can do the same thing if you want it to, but also offers the branch and so on and so forth?
Yeah, I guess possibly over time, but look at the head start that those guys have today, being fully digital from the outset, designing not just the customer experience in a fully digital way, but designing your back-end architecture in a fully digital way, thinking about how you're managing data in a way that enables that customer experience, but also enables automation and enables the use of machine learning tools. I don't think it's as simple as a bank just wanting to move digital only and actually being able to execute it across their end-to-end customer base.
Yeah, of course.
Potentially in the retail banking space, you're starting to see that moving forward. But look at small, medium enterprise banking today, corporate banking today, the banking of private wealth customers. The digital capabilities in that space are few and far between. And being able to fully digitize that is still quite a long time journey. Even if you chip away at it piece by piece, as we mentioned already, it's still going to take quite a while to get to the point where you look at a Starling or a Tide and their sort of fully digital, small, medium-sized banking experience is a long way forward from the likes of HSBC or Barclays or NatWest or whoever it may be. So over time, the business model of a Monzo or Starling may start to seem less attractive, but I think you're still a fairly long way off that. The ability to open an account in minutes for an individual or a business is such an attractive proposition for people. The way that Monzo and Starling are analyzing your data to give you insights is such a pull for people that don't have that sort of financial analysis today or have to do it themselves. A lot of people are shocked on one of the projects we worked on with one of the major banks to bring out one of these PFM tools, personal financial management tools. You realize how many people actually pull up an Excel spreadsheet at the end of the month, go through transaction by transaction and work out where they're spending their money.
Yeah,
maybe I should do that, but I don't. The Monzos, the Starlings are so far ahead with supporting those types of customers. And then you've got the people like me that don't do it, but realize that someone can do it for you automatically. And it's that piece of added value.
Yeah.
A lot of the banks just aren't in a state where they can do that on a regular basis on a sort of effective basis in every instance. So the banks are a step ahead, but also because their architectures are so much cleaner and more suited to developing functionality on top of, you'll inevitably see that what's hygiene today for sort of your digital customer experience, maybe that's speedy account opening, the ability to see your transactions, see your direct debits, see your standing orders, pay people instantly, get insights on top of your spending. That's sort of the hygiene today that a lot of the banks are trying to catch up with. That hygiene factor is going to continue to move further away as Starling and Monzo and Tide and the likes introduce more and more functionality that you just begin to expect as a customer. So I don't think the goalposts are going to stay fixed in a way that means that everyone's just going to catch up and get to this standard point. I think the goalposts are going to continue to move forward.
Mm-hmm. Yeah, interesting. So I guess there's three kind of main points for me that I kind of want to cover you before we wrap this up. And I guess this kind of came out off the back of our last Dailies of the North event. And I guess breaking them down, we're talking about workforce or part remote workforce, whatever the case may be, the impact then on talent, because obviously that's the business we're in, and kind of data and analytics. So from a workforce perspective, if we go back to the concept that businesses now are going to be redesigning office space to make it more spacious and fully expecting them to go to a part remote workforce where they've got 50% in, Monday to Wednesday, or the 50% in Thursday, Friday, whatever the case may be. Obviously, the impact that can potentially have on the real estate market is pretty obvious. But in your view, then, what does that mean for companies, like the WeWorks of this world that already host, a number of certain types of teams, as you mentioned, from the banking industry? I know Lloyd's Bank are in the WeWork that we used to be in, have a project team based there, for example. But do those type of businesses then that offer more flexibility around that service, will they begin to prosper, do you think, in terms of the financial services sector being more attracted to that as a proposition, or business as a whole?
Yeah, there's quite a lot of angles to probably think about there, and I've been giving it some thought, but don't have a full answer. But you look at some of like the WeWorks and all of their competitors across the board, and we use remote working ourselves as well, so we're fairly familiar with the market. The margins they operate at really require them to have almost full capacity at almost all times. So if you think about how their business models are going to adapt, if they've got to enact social distancing for any period of time, and if their capacity reduces in a fundamental or significant way, then I personally can't see how they are going to succeed in the short term, for instance. But if we think about maybe just the sort of more societal changes or the changes to the way that banks work day to day, I mean, absolutely, they might start to look at these flexible office spaces to provide those sorts of solutions. But as you mentioned, the retail market is going to be hit fairly hard by this. If you've got a 5,000 person, 40 floor building in Canary Wharf, it may be quite difficult to shift that piece of real estate for the value that you'd want to realize. So you're still probably going to have a fairly expansive and extensive real estate market. But again, this is another area where the banks have been consolidating over the years. We've worked with a number of banks where the offices have closed whilst we've been there, and you've had to move to a new location, or they're consolidating floors, or they're changing their lease in a particular way. And maybe flexible working space provides a short-term solution, but it isn't always the answer. And it's going to be really interesting to see how things play out once social distancing does become a thing of the past, because you've got to expect that you'd hope within the next 12 to 18 months we will be able to get slightly closer to people on a day-to-day basis, but not until it's safe to do so. I think the interesting thing about flexible working spaces, and where I've seen them used in the past, is, like you said, to carve out an individual team that's focused on maybe something a little bit different to everything else that's going on in the business. So maybe it is an innovative program, maybe it's the development of a new app, maybe it's a little skunkworks project to trial some machine learning tool. That can often be where you move people into these flexible office spaces, because they do have a different vibe to them. They can encourage creativity in a different way, and you feel like you're part of something slightly different to the wider sort of massive governance that sits somewhere in Canary Wharf. So that can be a really positive way of using those spaces. But I don't know exactly how it's going to play out, but we're really interested to see that when the banks do get back to bringing people into the office, whether there is a change in mentality around remote working, because it's obviously been a concept for the last 10 years or so since Wi-Fi speeds have enabled video conferencing to a good level. But for instance, as consultants, there's always been this idea of being on site and being present and being able to see and feel what we're doing day to day. And that's fair enough. You understand why people do that, because of the sort of the price attached to specialist services like that. But what this period has shown is that people can operate really effectively remotely. And if anything, the people we're speaking to are putting in more hours, rightly or wrongly. So you've got to maintain a work-life balance, but you're not commuting anymore, and you're reducing the distractions well, depending on your living environment and how many kids you have running around. You can reduce some of the distractions that you have day to day, with people coming up to your desk and meetings and going out for coffees and the like. So you're probably putting in a little bit more time. So that's going to be something really interesting to see, how people do shift their working practices, working behaviors, and embrace remote working in a positive way that allows consultants, third parties, to engage with the bank without needing potentially to be supplied with a costly laptop and mouse and headset and the like, and taking up costly desk space within this real estate that we mentioned. If people can work remotely, that's another way of dramatically reducing costs for the banks.
Yeah, absolutely. Okay. I guess moving into the point of talent then, obviously the whole data analytics and AI, piece around talent, it's a skill short market. I think wherever you are in the world, there's now probably more demand than there is supply across every continent and country within those continents. Obviously part of that concept then about having a remote workforce, I guess the theory behind that then, and part of a conversation we had at our event was, okay, does this mean then that, we've got access now to a global candidate pool, which theoretically, yes, I can get on board with the concept. But what you've also got on the other side of that is a whole host of businesses now going to have to go through some digital transformation, and therefore the demand increases further. And throw into the mix, then you've also got a global competition, right? So rather than being based in Manchester, where you've got maybe 10 other businesses that hire that same skill set, now you're talking about the world over. One thing that I guess, and to direct my question, when I had Ben, your partner from Woodhurst, on the podcast, we kind of had a chat around the talent attraction piece in terms of financial services, and often those type of data related and AI skill sets maybe rightly or wrongly view financial services maybe as not as sexy a place to work. So from a talent perspective then, obviously taking the whole remote global candidate pool, et cetera, what does that mean for financial services organizations in terms of being able to attract talent?
Yeah, that concept, obviously listen back to the podcast, and I think the idea of FS institutions not being so attractive might be true in some instances, but it might be the way that these companies are advertising what they're doing, or maybe the sort of traditional perception of these companies. But if you think about the transformation journey that they're going on at the moment, and the way that banks, the digital banks and traditional banks alike are, and also the wider fintech FS market, the sort of infrastructure players and the wider ecosystem, they're embracing a lot of these machine learning tools. It should be a hugely interesting place to work. It should have the ability to attract a lot of high quality data scientists, data analysts, machine learning engineers, machine learning ops engineers, all of these types of people that are needed to create these tools and these experiences for customers. And if you're doing that on a global level now, it might mean that the supply is going to increase dramatically. But if you look at sort of, like you said, the main reason machine learning projects are cited to fail, it's because there isn't enough or good enough quality data, or there isn't enough quantity of data, or it's because you don't have the people, the skills, the capabilities to work with these solutions. And that's in an environment where a lot of banks already operate on a global basis in some way. You might nearshore certain departments or functions or services. You might offshore entirely certain departments, functions, services. A number of banks in the UK operate globally already anyway. So even beyond just offshoring and nearshoring, you probably have local markets that have these staff within them already. So I don't know necessarily that the challenge between supply and demand is going to be resolved through greater remote working and the ability to operate globally. What could happen, and what would be a really interesting shift, is actually, rather than just relying on people within a local market managing the resource within that local market, is where you might have a team centered around London, Manchester, Birmingham, wherever it may be, using global resource in the US, over in Eastern Europe, sort of Poland, Krakow, the financial technology scene over in Krakow, and the amount of digital skills over there has proliferated over the recent years. Maybe people over in Ireland as well. Up in Scotland, there's the big sort of financial services play. You start piecing together all of these individual capabilities, but centering it on somewhere like Birmingham, Manchester, London, wherever it may be, and the management structures are all centered around that place as well, so that you do have a truly global team operating together without sort of local reporting requirements or local governance requirements that you need to stick to. That could be a very interesting concept, but the things that need to happen to allow that to work are pretty extensive, in terms of a change in culture, a change in mindset, having the tools to be able to operate in different jurisdictions, being able to transfer data or manipulate data from Krakow or New York or London, each in the same way, because those data regulations are different across those different jurisdictions. And then you've got the time differences that play into it as well, that can often shift the way that people work. So I think there's a lot of challenges to embrace, but that would be a really interesting concept, where you're not just restricted to the talent within your immediate vicinity. You can really open up to talent globally. But I don't think it will resolve immediately the supply demand challenges, because, like you say, they persist in every continent across the world currently. So that's not going to go away overnight.
Yeah, no, absolutely. I agree. And I think, another conversation I had recently around this topic was, if you've got, business out in the States that maybe pay more money locally than they do in Europe or the US, or the UK, sorry, what's stopping them from going, I can go and get the best person there is in Europe for this job, and I'll pay him the same as he'd get in New York City, and that'd probably be almost double what he'd be on in Europe, theoretically. So you throw that into the equation alongside, would someone based in, I don't know, Germany want to work for a major UK bank, or would they want to work for Facebook? So there's a whole host of other things to consider. So I think it's going to be really interesting how that plays out. Okay, last point then. So as you'll probably know, every organization, but particularly, financial services, the big banks that have so much data, are using that data year on year, to look, okay, what happened last year and the year before, and what might happen next year, and so on and so forth. what does that mean then for next year when they look back at this? Because surely, you know, the data that they're going to have over this period is going to be probably unreliable. Might be understatement of the century, but unreliable. You know, is it, well, let's not look at that, that's a write-off, or is it, you know, let's keep it hidden in the top drawer for the next crisis? Is it look at previous years, but then we've got to consider consumer behavior and spending habits are probably going to change, so therefore is that reliable? Where does this all fall in particular within the FS sector? What do you think the impact's going to be?
A great and very difficult question to answer. Well, first I'd say sort of separate out the reporting aspects from maybe the way in which the data that we're seeing now coming through can be used in a positive way. So if you look at this scenario, obviously it's a scenario of huge stress and strain on the economy, on organizations, on customers. So the data that we're getting at the moment could be used in interesting ways to define our response to further scenarios that look and feel a little bit like this, in a way that we probably don't have that kind of data today. Back in 07, 08, obviously there's models to go from, and we saw how that played out. But the economy is in an entirely different state at the moment. The way that the banks are able to deal with this type of economic strain is that much different now, and the data is probably in a better state. We've digitized so much more over the last 10, 12, 13 years that we have a lot more data. So you can use it to define future stress tests. You could use it to improve machine learning models for these sort of crisis scenarios. You see a lot of models that are already in place today have been quite disrupted by this period, as you'd expect, because as soon as the data input changes, the output's going to change fundamentally, and the model might learn in a way that you don't want it to. So this could be a good period for tweaking those models so that they can account for this type of scenario, but also learning from it for the future, because whilst you don't want to think about this type of environment coming about again, the recessions work on cycles. You see that throughout history. So within the next 8, 10, 12 years, there will be another crash of some sort. And this could be good quality data of what happens in this type of crisis environment that could be used in the future. If you then look at the reporting aspects, I mean, I think your guess is as good as mine. We've completely amended our forecasts, our targets for the year, as you can expect, because there's no point doing a financial review week on week, month on month that's just red on every single metric that you're reporting on, because yes, it's slightly soul destroying, but also we know it's red. We know it's a difficult environment to operate in for most companies, other than maybe Netflix or someone like that is absolutely rubbing their hands on this, and they've probably had to amend their forecasts and their targets in a slightly different way. When we get to next year and we try and review year on year on where we were, you're going to have slightly false metrics to look at. So you could look at what your target was this year and what you wanted to achieve and start reporting back on that potentially, and sort of assuming that maybe you hit your baseline or you hit close to it, and seeing where you are on actual 2021 versus target 2020. Or like you say, you just revert back to 2019. But even still, the impact of this environment that we're operating in at the moment is probably going to be felt for most companies for a lot more than just the next 12 months. So even amending next year in some way might be a false way of doing it. You don't know. So I think it's really difficult to say until we get there, till we see how companies look at this. But what's clear is that pretty much any organization, financial services, energy, consulting, other professional services, should be reviewing where they are financially and amending their targets for this year and next as well, because we're going to be pretty highly impacted by this, and trying to make assumptions about where things are going to go, but appreciating that these are just assumptions. And when we had a great quote recently, something like, when the situation changes, my conclusions change, right? And this is a situation where, you can forecast as much as you want, but week on week, the scenario is changing so much. So your conclusions have to change with that situation. And that's going to be the way we're going to operate for the next 12, 18 months, maybe longer. So yeah, tough to say. I don't have a crystal ball. But yeah, it's going to be an interesting time for reporting, I guess.
Nice. Fair enough. Well, Josh, we've nattered on for quite a while. I'm sure this will be more than enough for people to digest. So look, thank you very much for coming on and agreeing to do this. And yeah, we appreciate your time, and we'll speak to you soon.
Yeah, no problem. Thanks for
All right.
having us. It's been
Cheers,
fun.
bud.
Speak to
Thanks.
you soon.
Bye.
Bye-bye.